Welcome back to Red Rise. This is Hassan again, and I'm back with another video. However, this video is a sad video, a sad video. However, we move. I had a trade that is happening on AUD card. This is a trade that stopped me out and then started going in the right direction. Why? Because I did not use confirmation entries. I was right about almost everything, but I failed to use confirmation entries, so I was stopped out, and then the trade started going in the right direction. And right now I feel so pissed. I feel so pissed because if I had entered here, we would be in 138 pips, guys. I feel so pissed and disappointed. However, shout out to our followers from Kenya. You guys are doing a very great job. Thank you for standing out for what is right. Thank you for standing out for justice. We applaud you, we stand with you, and we are so happy that finally you are holding those people accountable. You're holding those people accountable and telling them that, look, guys, we are not our parents, and we want you to do the right things for us, for our future, and for the future people that we're going to put into this earth. Shout out to you, Kenyan guys, Kenyan brothers and sisters. We stand by you, and we are telling you that you're doing the right thing. Keep the fire burning. We're soon going to emulate you. So with that being put aside, I'm going to do a review of this trade that happened on a AUD card. So guys, just make sure that you subscribe to the channel and follow for more videos like this. I know this is a trade that I was stopped out, and I would have ended even on this candle. However, I thought that maybe I might end and it retraces. That second thought thing in trading is so bad. Yes, it can save you sometimes, but most of the times you're right. Trust me, most of the times you're right. But you fear to start because you know I might start and it retraces, takes me out, and then I lose the money. Okay guys, so subscribe to the channel and then we proceed. 5 seconds only. Okay, here we go. So now remember we're on the road to 300 subscribers, and so far we have only 220. Okay, so now what we have on screen is AD card, and I'll just kindly start from the weekly time frame. This is the analysis, some of you that I don't put on the channel. The weekly analysis I do, but I don't put on the channel. Why? Because most of you guys are trading the majors. You're trading Euro USD, you're trading USD card, yes, USD card, GBP, JPY, you're trading USD JPY, you're trading GBP USD, and what else, and gold, sometimes even Bitcoin. You guys don't trade these things over AD card, but they also give pips, guys. So now, first things first, the trend of the market. Where is the trend? The trend is going up, so we prioritize buying. However, if we see selling opportunities, we sell. But in this case, the last week was a bullish candle, so meaning chances were high that we might go up. So now we marked the previous week's candle opening and closing price, so we dropped down to the daily. So when we went to the daily, what did we see on the daily? The daily price open on Monday here. Before we do that, there was a supply zone, daily supply zone around this area, which price reacted from. If you look at here very well, price reacted and went up. However, when it reached here, got into the supply zone, and then price was compelled to drop down. So Monday opened and then price dropped immediately in the demand zone. But before Monday opened, we were here, and then we had marked our opening and closing price of the previous week. So after it dropped to the 4 hour, when we dropped to the 4 hour, we realized that there was a demand zone down on the 4 hour. There was a demand zone down, this one here. Very beautiful demand zone, very beautiful demand zone here. So price came, made a low high, lower low, higher high, making a QM, giving a demand zone here. So price went up, then it came back to test this demand zone on Monday. When price opened here, started dropping to the demand zone. However, I had put my buy limits here, and then put the stop loss slightly below. I think it was around 26 pips below the demand zone. knowing that price is going to respect this area, being that we're in the daily and 4-hour demand zone. So I knew price was going to respect this area. However, price came down, stopped me out, and immediately I was stopped out, it started going to the right direction. And look at the movements, guys. Huge candles, huge candles. And right now we are in 120 something pips. I feel so bad, but definitely there are things that I would have done better. So those are the things that I've come to review today. So first things first, what is the first thing you think I would have done to avoid this loss? What is the first thing? You guessed right. The first thing would have been confirmation entries. Remember, confirmation entries, if you have a demand zone and a daily, let's use confirmation entries. However, I did not use it because I thought I was going to consider this demand zone on the 4-hour. So confirmation entries. Okay, so now confirmation entries, we go to the 15 minutes. So when we went to the 15 minutes, what did we see? This is the hour area. So we got the 15 minutes, it was precise and clear. There was this trend line here that was dropping down. However, after price came out of this trend line and then immediately got back into the trend line, you were not buying, you drew another trend line because price had now given you another trend line. You just have to be like creative with the things, guys. This was the second trend line here. That was the second trend line. Ain't no way price was going to come outside of this trend line and give us this high breaking this supply zone and then it comes back the trend line. That was not going to happen, at least according to the laws of price action. This was supposed to be the third touch. The moment price broke out, we were not comfortable with this break. We waited for price to go up and take out this supply zone. It has taken out the momentum line, took out this supply zone. That means we are heading up. So we use the supply zone, the demand zone that took out the supply zone and the momentum line, which is here. However, I would buy here, but most people would be skeptical about buying from here. Why would people be skeptical about buying from here? The reason is simple, because it was tested many times. So now you would not ignore this, but this is the aggressive entry. So you would ignore that. Keep on following price action, because now since price action has confirmed down here, the daily demand zone is in control. We have broken all the supply zones, so just follow up looking for entries. There was an entry here, but this one was one that you could easily miss because it was so tight. Price gave a demand zone, broke this structure here, and then came to retest, then it went up. Look at the massive move from up, left a demand zone here. We had another demand zone here. Price gave a rally, base rally, and then gave a demand zone here, then price shot up. So now this was your entry. When price went up, you marked your zone like that, and look at the risk to reward. Marked your zone like that, and then put your risk to reward to, that is around 4 pips. I would put below this candle here. I think I would put around, I always want to be conservative, around 6 pips. And look at the risk to reward, targeting 35. That is 1:6. However, after price reached there, you remove some of your positions and pushed your stop losses to break even, and then hold. Look at where price is right now. So right now you would be at around 70 pips. It reached up to 72, so just count 70 pips. 70 pips, guys. And how many are you risking? 6. That is 1:10. So that is another entry. Then you leave that one. There's also another entry. This one here, this rally, base rally, breaking this structure here. Look at the move away, very clean move away. So just mark that candle here, that indecision candle, like that. So price comes here. You don't think you were tapped in here? Yes, I think it was tapped in. Maybe you would have missed by the spread. However, it came here and gave you now a good tap in, and then price started going up. So if you entered here, same thing, risking how much? You're risking 8 pips. to make a significant margin number of pips, that is 35, 1 is to 3, that is 32 pips, and then you would be in 58, 1 is to 6. Okay, so there was also another entry. The entries were many, guys. There was also another entry. If you're someone who's conservative, you'd consider this one. This is rally base. Rally broke this structure here, creating a higher high, and then now the thing is that the candle that broke this structure is the candle that took you in. So it took you in, broke structure, tried to go up, came back, retested, and then still went up. You would still be in profits. Here there was an entry, but it is not. Okay, so there's another demand zone here. So I think this is one you can take advantage of. But considering where price is, I would not want you to take this trade, because price is at a significant level on the daily time frame. But if you can risk a few pips, how many are these? If you can risk 9 pips, then this is something you can consider looking at, because you're going to risk 9 to make 20. Yes, to make 20, that is 1 is to 2.5. So immediately it reaches up, just move your surpluses above break even and let price flow. So this one is good. There is also support and resistance. But this one is good. It is good, but guys, it is good. The only issue is, you see, support and resistance, that area, guys. This is one of those trades you would really want to take. I swear, guys. This is support broken and then turns into resistance, then gives us a demand zone, goes up. So when price comes back down here, we shoot it to the moon. So guys, this is one of those trades you would want to really take. I think I'm going to enter this trade. Let me just refine the demand zone up to this support area and then put, where is it? Put it here. Price is retracing. Seems like it is retracing. This is a trade, guys. I'm going to try and enter like that. That is now the ideal trade. Price broke out, making a new higher high. There is a huge imbalance here. It has not yet been filled. There is liquidity to be filled. There is support and resistance, guys. These are the trades that you would want to take. However, you have to be cautious. You have to be cautious, guys. Have to be cautious. So now the target would be the next supply zone. Take away this liquidity here, equal highs liquidity up to this supply zone. Well, how many pips are you targeting if you enter from there? 100, guys. I think this trade is worth it, guys. Guys, this trade is worth giving a shot. This trade is worth trying. 100. However, the first level target should be 71 pips. At 71, you remove some, then you let it flow. This is worth trying, guys. It is worth trying. So 45 means this is where we are entering from. This one I'm entering right now, guys. I'm entering right now, and then I'll be targeting the upside. So that is all, guys. That is all for today. I just wanted to give you that review of that trade that happened. Guys, I just like supply and demand. Really, if you have enough capital, use proper risk management. Supply and demand, you're always going to win. Not always, okay, but the one time you'll win is going to compensate for around 5 losses that you've made and even put you into profit. That is business anyone would want to be part of. Okay, guys, that is all for today. Have a great day. Bye.